Certificates of insurance, COIs, proof of insurance, certs, and so forth, are different names or terms we assign to an ACORD form known as ACORD 25, Certificate of Liability Insurance. I'm going to discuss what this form is and what it's not coming right up. Hey, before I jump right into certificates of insurance, I want to let you know that if I don't entirely answer your question that caused you to click on this video, then please reach out to me. Email me, call me, however you want. I'm here to help you gain a better understanding of business insurance. And can I also ask you to do me a favor? Click that thumbs up button. That'll help signal to YouTube that this is good content and help my channel grow. Thanks. Okay, on to certificates of insurance. A certificate of insurance is just proof that the policies illustrated on the document exist with their limits of coverage shown. And that proof is only good at the moment the certificate is issued. The next moment, those policies could be altered or actually terminated. The point I want to make is that you need to accept a certificate for what it is. It's a very brief summary of the liability coverages the insured has in effect when the certificate is issued. Often, certificate holders put too much faith or emphasis on the certificate and want to use it as if it were the actual policies of the insured. The ACORD certificate illustrates the limits, coverage dates, and the insurers affording coverage for up to 5 liability policies. This one sheet summarizes about 400 to 500 pages of policy data which actually guide the terms of coverage. Therefore, don't expect it to provide a lot of detail. In fact, at the top of the ACORD 25 form, it says, this certificate is issued as a matter of information only and confers no rights upon the certificate holder. This certificate does not affirmatively or negatively amend, extend, or alter the coverages afforded by the policies below. Pretty strong wording. This certificate does not constitute a contract between the issuing insurer's authorized representative or producer and their certificate holder. Now, one major source of headaches related to certificates is the additional insured status certificate holders often want on a policyholder's general liability policy. And here's a big rub. Many business insurance policies in the small and medium-sized business market include an endorsement called blanket additional insured, which is great. This endorsement automatically includes an additional insured or AI status for anyone that requires that protection by contract. This way, a contractor doesn't need to add anyone to their policy by a specific endorsement and incur separate charges. A certificate of insurance is issued and the box is checked or wording is added that the certificate holder is named as an additional insured. Unfortunately, all too often, no one is asking if the certificate holder has a contract with the insured that requires AI status. If there's no contract, then the certificate holder does not have AI status on the insured's general liability policy. A proposal given by the contractor, a purchase order, or a handshake do not convey contractual obligations required by the AI endorsement, the automatic AI endorsement. So you've got to be careful here. This is why many general contractors, certificate management firms, and large project owners want to be specifically named as an additional insured on a policy by a specific endorsement. Certificates can often be the source of headaches, and I think much of that is due to the fact that the person or entity that's asking for a certificate doesn't fully understand why they want it and what they want out of it. One party is often copying insurance requirements from an old contract or something they found online, and it doesn't fit a policyholder's actual policy forms. This is why I recommend that before you sign a contract, a lease, or any other engagement document that has an insurance requirement, that you send me or your agent that section so we can determine if you have the right coverage in place to comply with the certificate requirements. So you may ask, what happens if you don't have everything that's required? Well, then you're going to need to amend or endorse your policy to reflect the requirements, and that can get expensive. One example that we see frequently are umbrella limits, especially with contractors working in buildings in Manhattan. It's not uncommon to see umbrella requirements to be $10 million. The problem here is that a contractor formulates their bid for a project, large or small. It could be as small as just replacing light bulbs, and they submit it to the GC or the building owner, and it's awarded. They never look at the insurance requirements, and now they've got a huge additional premium, which makes the bid unprofitable due to the added insurance costs. Speak to your insurance broker. Send them a copy of the bid package before you complete your bid to make sure you have the insurance requirements and avoid all these unnecessary surprises. This is what a skilled broker is there for, to help you before there is a problem. Here's the bottom line. Certs are only a brief overview of the coverages an insured has. If you're relying on that insured's coverage for your own security, you may want to see the actual policies to be assured of the quality of that protection. Certificates should not be amended by agents. This includes adding wording to the comments box that, for example, a hold harmless is covered or something like that. Additional insured status can be tricky. Make sure if you're an AI that you get the coverage you require and that it's not subject to a contract if no contract is in place. Not sure you understand when you're getting a certificate? Ask for help from your insurance expert. Still not getting the warm, fuzzy confidence you need? Then it may be time to consider switching experts. Give me a call or drop me an email and let's chat. Thanks.